Oh, let's get ready for Monday Mortgage Minute with your hosts, Tom McNamara and Bruce Woodburn.
All right.
Tomorrow is voting day, just for if you're in the primaries here in Florida. So just everybody remember to vote.
Yep. Remember to vote. Let's get that moving. We got a lot of work to do ahead of us. So
Correct.
I want to talk about investors buying real estate in today's market. So I'm finding that I've got just about as many investors jumping in the market as I do first time home buyers. And I find that quite curious in this particular market. Right now, I think we've got about 4 months supply
It's
on
about 4 months.
in the
Yeah.
Central Florida market. Why do you think that is? Now, you were saying that you were seeing a bit of an opposite. You were seeing that a lot of investors were selling. So let's talk a little bit about that.
Correct. Yeah. I'm seeing personally on both looking at like national data or Florida data, the big hedge funds, right? I think there's 6 or 7 of them that own a lot of homes. They're actually net sellers right now, right? So they're still buying, but they're selling more than they're buying, right? I think up until today, or give or take maybe last week, in Florida alone, they've sold 3,000 more than they bought, right? Now, that's not going to move the needle on housing. 3,000 houses across all of Florida is
Not a big deal.
but that shows you a trend. They're doing something different with their money, right?
They're doing it also because they're getting pressure from the government because they cannot have a certain percentage of homes owned by one corporate company.
They can no longer buy as of, I think it's going to fully take effect January 7th. I think that's the day that they're not going to be able to buy an additional home if they have more than 350. Okay.
That's right.
And some of these companies have 59,000 homes. So they're not going to sell enough to get below that. And nor do they want to. But as of whatever that day is in January, I think it's the 7th, they won't be able to buy another home, right? So I think they're repositioning some of their money, but I think it's possible that maybe like some of my small investors, I work mostly with smaller investors that own
Me too.
maybe 1 or 2 or 3 homes, or I think maybe the guy that I know that owns the most probably owns like 40, right? Which is a decent number of homes to own.
Sure is.
That's small in comparison, right? And most of those guys, what I'm finding they're doing today is they're doing a little different calculation, right? So when we buy a home, we look on return on investment.
Yes.
Hey, I'm going to put 50,000 down, and here's my cash flow, and then in 20 years when I sell, I'll sell it for this much, right? But what they're doing is they're looking at a house that maybe they spent $60,000 on cash wise 20 years ago or 15 years ago, and while rents have gone up, the appreciation has outpaced that.
Sure it has.
In a lot.
And now you're sitting on a pile of capital that's not growing as fast as you
Correct.
could transfer that capital into another vehicle that would produce a higher rate of return.
Correct. That's right. So my ROI on that $60,000 house might have been initially 12, 15%, which is fantastic, right?
Sure.
Now, when I look at return on equity of it currently, I might be at 4 or 5%. I'd much rather get 10 or 12% somewhere else if I can. So I might be swapping that out. Now, I might be going into a different market. My understanding is the Midwest is still really hot where you can buy a home and get a 10, 12, a double-digit return. But you really can't do that here in Florida.
No, it'd be difficult to do. Yeah.
To get a double-digit, unless maybe if you're running a very good Airbnb process. But that's
an opportunity, but it becomes a job. You're right.
It's a job.
It's a job.
Yeah. Running an Airbnb is a job, especially.
I've done it before, and people that are getting into it, they have to be prepared for it. And listen, it can be lucrative. And if you have a little bit of time to do it, you can do it. I've got a client right now. He bought one in March, and now he's buying the one next door. And these are $750,000 units, right? Bedroom units. HOAs are huge. Maintenance costs are unbelievable, but it's paying off for him, and he's getting cash flow on it, which is your average long-term rent. You're going to get some cash flow on it, most likely, depending on when you bought it.
Sure.
But even buying today, I look at some of these investors that are buying investment properties that are doing long-term leases on them, like 1 year or greater. There's not a lot of return on it. So why are they doing it right now? To me, it just seemed like it was a little counterintuitive, but I'm seeing some smart people, and they're like, I'm looking at the future appreciation. I think it's been stagnant. I think there's an opportunity, And I'm jumping in now, feeling that we're going to turn around in the next 3-4 years and this prop up in value again.
Yeah, they might just be a little bit ahead of the game. I don't think personally for the next 2 or 3 years that we're going to see major appreciation.
I don't think so either. And I don't think we're going to see rates dropping either.
No.
I think we're going to pretty well stay about where we are, in my opinion.
Yeah, so I think we're going to be pretty in a malaise, if you will. That's not a bad thing, right? Because let's face it, wages did not keep up with house appreciation. So maybe we just let wages catch up a little bit. But getting back to the investor mindset, with these investors that are buying for long-term cash flow, how are you financing them? Are they having to backstop it with their own cash, or what's going on?
So it's really a variety. I'm seeing some conventional that are putting 20-25% down and just doing a conventional loan. I'm seeing folks that are looking to do a bank statement loan. They're self-employed, so they don't want to provide all their tax information. So they provide their last 12 or even 24 months bank statements. Those bank statements, what we do is we add up all the deposits, and then we'll give them 50% of the annual deposits, providing we don't have a decline. As long as you're not seeing a decline in business, that can be problematic on a bank statement loan. And then the third option is that they have the ability to buy on a DSCR loan, a debt service coverage ratio, which is quite simple and very popular with a lot of investors, because you can get that rate down pretty close to a conventional interest rate. In some cases, even lower than conventional interest rates. Yes. And some of those, on most of our products, we can have the seller contribute more than the maximum allowable on a conventional loan. Because on a conventional loan for an investor, the most a seller can pay toward the buyer's closing costs is 2%. On a DSCR, you can get 6%. Okay. So on a bank statement, you can get 6%. So you can take that loan and buy that rate down with the seller funding it, and it really works out beautifully for the investor.
Wow, that's an interesting one. I hadn't really thought about that one.
And here's something else that it blows my mind, that there's so many people out there that are high wage earners. Like maybe you're making 150 or more, 200, 300, 500, whatever it is, but you're W-2. You don't have any ability to have any write-offs. If you don't have real estate or some other vehicle that you can depreciate and take write-offs on, you are going to be taxed to death. And when I look at somebody that's a high net worth wage earner and they're paying, friends of mine they're making $3 million a year, they're paying $150,000 in taxes.
150,000.
Excuse me, 1.5 million in taxes.
Yeah.
1.5 million. If they were paying 150, they'd love it. 1.5 million. That's was almost half of their income was going toward income taxes. And that's ridiculous. So you have to have vehicles to help you get through that. And I don't think people look at their taxes as a line item on their budget, but they should.
Yeah, absolutely. Honestly, that's one of the reasons I got into real estate in the first place. I was a high wage earner at a Fortune 500 communications company, right?
Yep.
And I needed to find ways to pay a little less taxes. And I found real estate and I started doing real estate. And here we are, right? There are definitely ways to use real estate to even offset your W-2 income, which a lot of people don't think you can.
Now, real estate typically is more of a long-term play. It's not a short-term play. There are other vehicles and things that you can do to defray taxes or defer them, reduce them. But real estate is a simple way to do it. And but it is a long-term play. Typically.
Yeah, absolutely. It's one of the things that is the downside of real estate as a asset class is that it's illiquid, right? You can't just liquidate it. If I own some Microsoft shares, I can go on and 3 clicks later, they're gone, right?
Absolutely.
And I've got money in my account. Whereas with real estate, at best, it's going to take a month and a half. And that's if I'm super lucky, and maybe I'm taking a loss at that point because I need to get rid of it.
If you've got 4 months supply, we got about 66 days on the market. Yeah. So you start to see sellers starting to get a little bit nervous at about, 45 days, I guess, if they haven't had any offers.
They do. Right? Yeah.
But what I'm confused about too is, and we talked a little bit about investors in this, but the first time home buyer, is really struggling right now. And they really feel that affordability. And a lot of people are talking about, all the congressmen and everything are talking about affordability, but there is no real game plan to be able to get through this. And I think you nailed it earlier. We have to have our wages catch up with inflation, and they
Sure.
have not caught up with inflation. And that's what's making it more difficult for that first time home buyer to jump in the market. But there are ways to do it. There are low cost loans. There's low down payment loans, FHA, conventional loans. We've got 100% financing, FHA, USDA. Veterans can get in for no money down. These kind of things can offset it. And I'm going to tell you right now, I see opportunities for people to buy, because when houses are on the market for 66, 70 days on the market, sellers start to get a little bit more
Flexible.
willing and flexible to work with a buyer.
Yeah,
Now,
absolutely. That's been for sure. That's the case. And I'm going to say, and you'll remember this one. We recently helped somebody buy a home just a couple weeks ago that thought he wasn't going to be able to buy a home for a long time, right?
Yeah.
Had some financial challenges, and we were able to help him through it, walk him through steps to fix some certain things and move some money around and all those kind of things. And there he is. I got a voicemail, a voice text from his girlfriend saying, "We're so happy here. It's so fantastic. I woke up and the sun rose over the pool." I was like super happy to get that voicemail.
I'm
But
going to send you a copy of the review that he gave me.
yeah,
Did you see a copy of it?
I got a very similar review.
Oh
So-
my gosh.
But that's the kind of thing that really, if you think about it, really helps you keep going, right? Because look at what we did for that person and how that's going to change his life. And we've done that.
Doesn't it feel good?
It does.
It feels so great.
But that isn't the first time. We've done that multiple times.
We do it all the time. We do it
Yeah.
all the time, but that's why we do it, because that's a success story when we can help somebody change their life that
Mhm.
didn't think it could be. And then they wake up and they go, look what I'm looking at right now. And thanks to you guys for helping us get there. It's very gratifying. Very gratifying.
It is.
Hey, if you're looking for somebody to help you buy a home, sell a home, invest in real estate, call Tom McNamara. He's got the experience. He really does care about it. He wants you to win. And it's really gratifying for us to be able to see you win. He can be reached at 407-754-6412, or you can visit his YouTube channel at Florida Real Estate Insider.
Yep.
And if you have questions about getting financed, what type of loans might suit you best, whether you're an investor, a first-time home buyer, move up buyer, maybe you want to investigate my Leapfrog program to become a property investor, I'm happy to help you with that. You can reach the loan arranger at 407-250-9. Let me give that again. 407-230-6599. That's my direct cell number. You can call me there. So, Tom, I think that it's great that we're helping folks in this market win, even though it's a tougher market to win in.
It is. But it's more gratifying to be able to win in this market. And I know that the people that we're selling homes to today in 3, 5, 7 years, they're all going to be super happy that they got in now, because I see prices over that time continuing to rise.
I agree. Hey, I know one other thing. We got to cut it loose, but I want to do another show on 1031 exchanges. And I want you to explain a reverse 1031 exchange.
I'll be happy to do it.
So we're going to cover that
last year.
Yep. Hey, thanks again and have a great week. Thanks for joining today.
Thanks, Bruce.